I think considering the background of this audience, whatever I understood, so I'm not covering any of the standard topics, which I'm sure all of us are by now aware of, how different frauds are happening, etc., etc. So I'm covering some new angles that have emerged in the last 3 years, especially the regulatory angle, the compliance, angle, and also some new age frauds that are, happening. I'll take a couple of, case studies and then discuss those. And how, as chief internal auditors, chief financial officers, or CXOs in general, we need to be aware of what's happening around us and then be proactive in addressing these risks is what we will cover over the next half an hour. So if you look at today, you scan through any financial newspaper or a financial website, you will find almost on a daily basis on page 1 or max page 2 or page 3 that some corporate has been raided, SEBI has instituted some action, SEBI has levied some penalty, or CCI has done a dawn raid, CCI has levied a penalty, or Enforcement Directorate has done a raid, Income Tax has done a raid, GST authorities have done a raid. So almost on a daily basis you see a regulatory action that is happening. So there are 2-3 things that have happened in India over the last 5 to 6 years. One, most of the laws are amended today in order to first formally capture and recognize the concept of fraud. There was no definition of fraud that was there even under Companies Act, the prior Companies Act. In this Companies Act, under 447 explanation, they have incorporated the definition of fraud. Similarly, in other areas, they have incorporated the definition of fraud to first cover that. The second thing that has happened is the powers that have been given to the different enforcement authorities to go and catch first what is the wrongdoing that is happening and then take action. That has also substantially changed. Third thing that has happened is earlier we would have never heard about an Enforcement Directorate coming to a corporate and raiding for a normal sort of a fraud. Right? Earlier it used to be mostly in a terrorist financing, money laundering, those kind of issues. But in 2018, the Finance Bill amended the Prevention of Money Laundering Act, incorporated section 447 of the Companies Act within that. Now, which means that any fraud that is defined as a fraud under Companies Act can also be investigated by Enforcement Directorate. So typically today even an employee reimbursement fraud can also be investigated under PMLA by Enforcement Directorate. So that's the change that has happened over the last 4 to 5 years. Parallel to that, the other change that has happened is the regulators today are up to speed with all of us. Like Mr. Suresh said, that public sector banks today have evolved, are on par with any of the private sector banks today. Similarly, the regulators are also evolved, enforcement agencies have evolved, and they are on par with all of us. Today they have all the technology, all the tools to detect wrongdoing that is happening in the respective areas. Let's take an example of insider trading. Insider trading as a concept has been there for ages immemorial, but never, I think, got the right attention. But the insider trading, prohibition of insider trading law was amended in 2019, and subsequent to that, SEBI has a dedicated cell now to monitor insider trading. So what they are doing is they are picking up abnormal trades. So what is an abnormal trade? Let's say Naval never trades in a Yokogawa shares, but suddenly now he has bought 10,000 shares of Yokogawa, and within 5 days he has sold those shares. So now that is first, that transaction is identified as an abnormal transaction. Then what they will do is they'll pick up Naval's data, and they have access to all the data about Naval, whether the bank statements, telephone records, anything that he has done on the social media, everything is available with them, and they have implemented tools to identify those activities. Then from there, they are identifying how Naval, who is not related, at present he is related, but generally not related to the company, he has actually, sort of being in touch with somebody at the company in which whose stock he has traded with. So they are establishing a link through the WhatsApp, through the SMS messages, through telephone calls, through CDR, data, as well as through the bank statements. And that's how they are linking and identifying how you potentially use the unpublished price sensitive information in order to do a abnormal trade. So that's just one example I am giving. A similar process is being followed in income tax, similar process is being followed for GST. So wherein through technology they are identifying abnormal patterns and investigating those abnormal patterns to identify potential leakage of revenue or potential misuse of power that has been given to either the corporate or the government officials. So that's one element that we see. The second element that we see is how some of these is impacting the industry as a whole. Earlier it used to be that some instance happened in one of the company in an industry, it used to remain with that company. But now what we are seeing is, let's say in a pharma company, somebody is raided vis-a-vis the healthcare professional payments that are happening, and that happened just a few weeks back. From then onwards, what we are seeing is everybody in the industry is now looking at that aspect, because it can expand to them. So that's one angle wherein it's not just impacting one company, but it's also impacting the whole industry. A related element to that is, most of the times whenever there are compliance issues, something that we can't do, we used to outsource to third parties, thinking that we are safe. Even if third party does something, then nothing will happen to the organization. That concept doesn't exist anymore now. So in several of these cases, the third parties were first identified, and then from there they proceeded to prosecute the organizations as well. Let's take two examples which are in public domain. One pharma company in Bangalore, one infrastructure company headquartered in Mumbai. In both the cases, 3 employees in one case, 4 employees in another case were arrested for potential bribery. That was done in one case for a project approval, in one case for a drug approval, right? So now earlier these things were considered as pretty normal, in the scenario that, we need to get it done, get a third party appointed, third party liaison agent will go, get that done, we pay them the fee, right? Now, when the third party is caught and identified that it's not just a normal payment that has happened, but a potential bribery that has happened, it is coming back and hitting the corporate. As internal auditors, as I think CXOs, we need to understand these changes that are happening in the environment and make sure that our processes and our systems as well as our audit procedures are gearing up for these. I can keep going on and on this. This is just examples that I am sharing. They are close to about 400 cases just in last 2 years, where different actions have happened across different industries by different regulators. So these concepts were not that common earlier. Now it is very common. And I'll also share one anecdote in terms of the whole fraud and forensic, how it has evolved. 25 years back when I started in this area, it used to be a hush-hush affair. In fact, till I think Satyam happened, it was a hush-hush affair everywhere. Nobody would want to talk to anybody about fraud. And in fact, when I used to come to Chennai earlier, people used to say, why are you coming to Chennai? In Chennai, there is no fraud. People are all religious. Nothing happens over here. Of course, I have one of my largest team sitting over in Chennai today. So now I think we are doing conferences on this. We are writing books on this, and we are talking about this openly. So that is how this concept and the topic has evolved over the last 2 decades. Earlier it was not that easy. So we can keep going on and on, but I think the bottom line is the regulators are active, the enforcement agencies are active. The fraud is not just a topic that is, I think, internal for you. It is now necessarily an external topic as well, especially if it is material, and you would not know when it will come in public domain. So the old concepts that, it's an internal concept, I will do something, I will take an internal action and then go ahead with that may not apply today in the current environment. So if you look at even the courts have taken a very strong stance that economic crime is in fact more prominent and more damaging than the physical crimes. And Supreme Court has gone on record to say that, because it impacts livelihoods of multiple people. A bank fraud happens, a bank collapses. So it's not just the bank and employee that get impacted, the depositors get impacted, we as citizens get impacted, because our taxes increase, and which is what is used to fund the capitalization or recapitalization of that bank. So today the courts are also taking a view that economic crime is more serious than a physical crime. Then if you look at Competition Commission of India, I don't know how many of you are fully familiar with this. If you are not, I think you should start getting familiarizing yourself, because 5 years back as a concept, again, it didn't exist. Only liquor companies were bothered about it, or probably cement companies were bothered about it. But now I think it's coming in different sectors, and they have approvals to do down raids. And in several cases, and why I am using the word dawn raids is, in several cases what is noticed is most of the corporates or even the internal teams that are working, they are not familiar with the concept of dawn raids, how to deal with a official when they come. They are treating them like they would treat like any other a PF or a ESI guy comes in. That's how they are treating them. That itself lead to an issue because you are supposed to first of all treat them appropriately. So you need to understand that these changes are happening, and the way the regulators and enforcement agencies are working now is slightly different. In addition to using technology, they are also preparing themselves and then coming to your office premises. Today a CCI when they do a raid, they don't do a raid suddenly, tomorrow thinking that I will on a surprise basis I'll detect something. They are actually spending 1 year to 18 months understanding what is happening in that industry, what is happening with that corporate, what meetings are happening, which locations people have met. Like for example, in cement industry, they actually knew exact locations in Chennai, Bangalore, where marketing people have met, agreed on pricing, and then I think, they have the names of people for whom they need to collect data. And today when they are coming, they are not coming and asking for, give me physical copies of this data, that data. They are saying, I need a backup of your ERP. I need backup of your electronic devices, including laptop, mobile phones, server email backup, and any folder that you have where you are storing common data for different departments. So they have complete understanding. They are coming with specific names and following this process. Now, as again internal auditors, are we doing anything around this area? In very few companies I have seen that people are even looking at this area. Are you doing an internal audit on compliance with the CCCI regulations? I am not seeing that people are doing that, right? Because I think what happens is we are only doing still traditional areas and maybe some technology related areas. But in respective industry, there are new areas that are emerging which are of higher risk, where the fraud and compliance risk is very high. But I don't think every organization today is focusing and covering that. Then if you look at reporting, so that's another thing that has changed substantially. Earlier, again, it used to be an internal affair. Only if it was substantially high coming in public domain, then people used to report. But now there are multiple reporting requirements. Under Companies Act, there is a reporting requirement. Under CARO, there is a reporting requirement. Under SEBI LODR regulations, there is a reporting requirement. For fraud, as well as now SEBI is asking you to report on forensic audits as well. That again is an important thing for all of us to understand, that when you are doing a fraud investigation, you will have to do it in an appropriate way. Make sure that all the ticks and boxes are covered, all the angles are covered, because you never know that the report that you are issuing as an internal auditor in that area would tomorrow will be with a regulator or maybe in public domain, as I think it is required under the SEBI regulations on disclosure of forensic audit reports, right? In certain areas you also need to disclose the report to the stock exchanges. Obviously when you disclose to the stock exchange, it will come in public domain at some stage. So today when you are doing an investigation, you be also mindful of the fact that auditors will come and ask you as internal auditors, how did you cover that area? If you had a whistleblower complaint, earlier the concept was that, it's not material, it's just noise, so we need not look into it. Or people used to take a call depending on if a complaint against a star performer is there. So then some people will come together, do some exercise and then say that, nothing is there. All those I think would not apply in the current environment, because you never know how it will come out in a different form. Because today's whistleblowers are different and they have multiple avenues to, sort of disclose. First, they will disclose to the company in most cases. If company is not acting, they will disclose to the audit committee. If the audit committee chair is not disclosing, they will disclose to the investors. Let's say a private equity fund or a public sector bank or anybody is an investor, they will disclose to them. If none of those are disclosing, then they are disclosing to the SEBI as well. And in several cases, they are marking a copy to the PMO as well. Right? So the whistleblowing today again has evolved in a different way, where earlier people used to put in a suggestion box or rarely report. Now you are finding that the next generation is completely different. They are not bothered. If they find an issue, they will just report, use an email. They are very smart. They will create a proxy email box through a proxy server. They will send that so that you can't detect. Right? So that's again a big change that has happened in the current environment. Of course, one caution that we always give is that the concept of materiality still applies in terms of reporting, not in terms of investigation. Investigation, we still advise that you should investigate every case, right? Because you don't know what is not material today might actually be material once you dig deeper into it. However, on the reporting side, obviously you need to be careful, because let's say you have discovered a 2,000 rupees reimbursement fraud. Now you would not want to disclose that. ICAI guidance note also provides that only if it is material, then you need to disclose in the CARO. So if it is a fraud by KMP, then you need to again disclose. There is no, I think, again, concept apply over there. So that needs to be disclosed. Forensic audits, we already disclosed. But what is interesting about forensic audit disclosure is, when initially the publication and the notification came in, it said all forensic audit needs to be reported. Then a clarification came in. After that, everybody thinks that nothing has to be reported. But that's not the case. You still need to report certain categories. So it's again advisable to look at what needs to be reported. Otherwise, tomorrow it will be considered as non-compliance. And the wording that is used in the notification is very clear. It says forensic audit by whatever name called. So you can call it special review, you can call it management review, you can call it process review. It doesn't matter. But if it's in the nature of investigation, you are supposed to report. UPSI, again, I think just to add one more point, insider trading, like I said, SEBI is monitoring. Now, the next level of monitoring. Stock exchanges last week have sent notices first to the top 1,000 companies to explain them what systems and processes have been implemented to comply with UPSI regulations, which is the POIT regulations. So now they are asking, earlier what they are doing is they are primarily going after the individuals who are benefiting from the transaction, because company rarely or never actually benefits from a insider trading transaction. It's the individuals who benefit. So they are primarily going after individuals and prosecuting individuals. But now a thought process has emerged, again coming from Western world, that if we penalize only companies, individuals, it will not help. We need to start penalizing companies as well. So how do you penalize companies? They are coming back and asking, how have you implemented these policies and procedures? Let me know how are you compliant with the POIT regulations. For example, show me a copy of your designated persons database. Show me an example of how you are complied with identifying the people who are covered persons. How did you notify the trading window closures for those covered persons? Like that, they are asking again different questions to confirm whether the companies are implementing or not. And whenever they are doing an investigation now, as part of the investigation, they are seeking data from the company, confirming whether the company has complied with the relevant regulations or not. So in a different way, they are reaching out to the company and asking for this information. Again, I don't know how many internal auditors are reviewing this area. Right? It is still given to the company secretary. They are saying that somebody comes, you give them 1 lakh rupees, they'll do the tick in the box and then go away. It's not something again that you need to put it in the last corner. Please make sure that you bring it up and also notify internally within boards, because in most cases what we are seeing is that once SEBI comes into picture, then there will be panic all around. Independent directors will ask what was happening, etc., etc., etc. And believe me, in most cases they are coming back and asking, oh, why you didn't audit this area if it is a high priority and high risk area as an internal auditor. So now let's look at a couple of examples of fraud. So now social media monitoring. So I don't know, again as internal auditor, are we doing social media monitoring in terms of picking up any information that is available in public domain with regard to our organization that can be helpful for us to detect and investigate frauds. Let's take example of recruitment frauds. So recruitment frauds are back in business because the number of resources that are available in the market are substantially lower than the number of jobs that are there, and then people need to be deployed over there. So all the old style things that used to be there in terms of modification of employment letter, fake experience certificates, fake salary certificates, all those are back in business in the last 2 years. And today I think what is happening is, in one case, just one company, that company of course recruits 8,000 people a month. We found that 800 people a month were having some element of fraud in the documentation that they had submitted. 800, right? And several of those we are able to pick up as a lead from the public domain, where some people wrote on the blogs saying that I attended the interview, and then after 10 minutes of that interview I got a call that I need to pay so and so amount. and I'll get a favorable, rating, and then I'll proceed to the next, stage of the interview process. If I don't do that, then I think I would not be, considered for the next stage of the process. Now, it was there in public domain. Nobody picked up. People are monitoring more like customer-related complaints, not necessarily fraud-related, complaints. And the next concept, or I think a case study, and then I'll come to the concept, is how people are doing fraud is slightly different, right? Frauds have always been there. Typical recruitment fraud earlier was, you go to a recruitment agency has a connection with a recruitment person within the company. You pay amount to the recruitment agencies, they'll manage all the documentation, make sure that your CV is shortlisted for the interview through the internal recruitment person. You do the interview, clear the interview, and then you are on the job, right? Those were the traditional frauds. Now what is, happening is slightly, different. The old ones are still happening. The new ones are, one example, which we actually got 2 cases in 2 different companies. A manager who is nothing to do with recruitment. The manager in a business function goes to a team member and tells the team member that this year, because of the situation we are in and the margins are not that great, costs are increasing, but revenue is stagnant, rates are stagnant, so the bonus won't be that higher, but you are my star performer, so I want to help you. So take this CV and refer this CV as part of the employee referral portal, and you will get 1 lakh rupees, which would compensate you for the additional bonus I would have generally given you as a star performer. So the employee is very happy, goes to the recruitment portal, submits the CV gets processed. Now who interviews? The person who actually gave the CV to the employee. He interviews this individual. Obviously he selects because CV is given by him only. The person comes on the board, joins the organization. 3 months down the line, the person who referred and this new employee, both of them are sitting at a lunch discussion table, and the new employee is somehow not happy with the manager, so he's cribbing about the manager. So the old employee tells that, no, he's so great, I'll tell you how he helped me. So then he explained the entire process, that your CV was given to me by him, and then that's how I got it. So see how helpful he is. So why are you, cribbing about him? He said, sorry, I paid 2 lakh rupees to get into the organization. Right? So that person paid 2 lakh rupees to somebody. Through that, the manager got in. Now, this kind of a fraud, you would not be able to detect through a normal process. Because nobody would imagine that a business manager is giving a CV to a junior who is submitting, and then the person coming into the system. The other problem that we have seen in this entire process, I am just taking 1 or 2 examples because of the shortage of time, is the entire background verification process. In most organizations, the way procurement team negotiates with the background check vendor and brings him down to a 400 rupees, 500 rupees check on the background check, you can imagine the quality of check that is happening. People are just ticking the box. And there is so much pressure on recruitment and bringing people on board that even if you are having an orange background check report, people are pressurizing the background check vendors, do this 1 or 2 steps and then convert it into green because we need people on board. That's what exactly is happening. Again, I don't know whether you are actually going and auditing that area. How many of you go back and audit the background check areas? Because people think it is outsourced, a third party is doing it, XYZ the agency is doing it, so it should be fine. But I can guarantee you that you go back and check, pick up that as an area, you will find enough gaps in that area right now as we speak. The new areas again within this is impersonation. In COVID it has increased because most of the interviews are happening online. In fact, people are joining at their home. The computers were sent at their home, so you would not even meet the person for 6 months, 1 year, or even 1.5 years. So the person who was giving the interview was different than the person who is actually joining. And there are multiple such instances identified. Again, are we auditing these area? Are we going back and checking whether as part of recruitment process, do we collect a photo initially? Do we take enough screenshot when a HR is doing an interview, when a business person is doing an interview, and then comparing it with the person who has actually joined? And then are we monitoring red flags after the person has joined? For example, person says, I'll never come to office. For whatever reason, I have this issue, that issue, I'll not come to the office. So those are the examples which you need to pick up on the impersonation side. Then moonlighting, I think is an interesting conversation that is happening in the industry, especially in the services industry, because on an average now it is estimated that 5 to 10% of the people in services industry, whether IT, financial services, others, they are doing moonlighting in one way or the other. And this has now been confirmed through actual cases. I'll give you one example. We were doing a due diligence on behalf of one services company on another one. And so we found that 300 employees of this investor company, which was supposed to invest, were moonlighting with the target company. So it came as a shocker to the board of the investor company, but 300 of them were actually moonlighting with the target, company, right? So that's again a big issue. It's easy to do now because 80% of the population still is operating from hometowns or homes, and they're selecting shifts during this they will work if the shifts are available, or they are doing in a manner that they are managing in a way that it never comes out that they're doing moonlighting. So new areas again to pick up and then do reviews. So I'll just summarize and then I think hand over to Aditya in few minutes. So what we are seeing is new kickback models are emerging. Earlier, kickback used to be in cash, some gold, etc. and all. But now it is in cryptos. People are asking you to give kickback in cryptos. People are asking to give kickback in foreign exchange. Because the value of money is less, the bribe amounts have gone up. Both private as well as public, both bribe amounts have gone up. So give me in dollars. Because say 10 lakhs, here I need to carry so many, sort of bundles. Here I can just carry one bundle, so it will be 8 lakhs. One bundle will be 8 lakhs, right? So that is how I think, people are asking. Or my kid is, a lot of kids are today having education outside India. They are studying over there. Please organize to send funds over there. They are researching and telling you that you have a subsidiary over there. Through that subsidiary, you can organize the funds. So that's a new model that is emerging from a kickback point of view. Gifts and events to enhance sales, this was considered very normal, but depending on the industry, it's not normal. Plus, there is a PMLA angle that is being brought in, wherein they are not able to go after through a normal route. So agencies are saying that this is money laundering because you have diverted funds. In your books, you are recorded as a genuine payment, but outside it is not a genuine payment. Or in several cases, in the books you are recorded that it is paid to, say, a doctor, but it is not actually paid to the doctor. It is visible in your bank statement that it has been paid to somebody else. So it is money laundering and not just a normal fraud. So that is how they are picking up. Marketing communications versus compliance requirements. This is again very interesting. So there are multiple cases today regulators are investigating wherein the marketing team has gone on record to the press, media, social media, everywhere, saying that, let's say an example, I have done this acquisition is $3 million, right? But they are saying that it is a strategic acquisition. It will get me into a different, zone going forward. However, the compliance officer has not classified this as a UPSI. So regulator is coming and back and asking, okay, by the way, all your other CXOs have said that this is a significant transaction, critical, but you are not classified as UPSI. Can you explain? Not acting on anonymous whistleblower complaints is not an option in the current environment. You should look at whistleblower complaints if those have some facts, if those have some patterns, if they relate with some of your own findings. You need to, I think, look at that. Don't put the anonymous whistleblower complaints in dustbins. Action of third parties does not impact us. Whatever you do or you cannot do, if a third party does, then you are responsible for the actions of the third party. In fact, now more and more cases are coming through the actions that are happening on third parties. One company identified where a third party was involved in some, say, improper transaction. Then that third party is raided and they identify who are all the clients of that third party, then go after those as well. So today you can't sit idle and then say that, oh, third party is there, we have ticked the box, done the basic checks, so we shouldn't be bothered till the time we have the invoice for the transaction. What is the underlying supporting for that invoice? In several cases that is not there. And we think that, oh, it's normal, it's known, so this area we shouldn't touch. Scrap is an area we know cash will be generated for XYZ purpose, don't touch, but don't follow that path. Follow a different path. At least go and touch, review, see what is the exposure to the organization. Is the documentation adequate or there is an exposure to the organization tomorrow? Submitting claims for enhanced amount, expecting part rejection, like if you have contracts with even private customers or government customers, it is a common concept that if I submit for 100, they'll reject something, so let me submit for 120, and then if they reject 20, I'll still get my 100. Now the concept is, what they are doing is they are identifying this 20 and they are saying that I'm rejecting your entire claim. And it has actually happened with multiple companies, especially in the infra space. Because you have done fraud, I am saying that entire issue is a fraud. And then you have signed an integrity pact or a anti-bribery clause saying that you would not do this. Now you have done it, so I am stopping all your payment. So that's again the change that has happened. Then preparing Excel and projections to match the requirement. A very common thing. I don't know how many of us go back and audit the documentation that we are submitting to the bankers. Today you are again sitting on a huge risk over there. Because if they have manipulated the documentation, reverse Excel prepared, I need this much of drawing power, so I write what I need, look at the Excel, something is not coming in, change one cell, come to the number, that is considered misrepresentation earlier also, but nobody was taking care of it or taking notice of it. Now people are taking notice of it and then going after you. So do we audit that area? I don't think we audit that area. Bypassing cutoffs for revenue recognition, sharing of logging credentials, digital frauds, cyber frauds, how people are getting exposed to it is again, I think, again a topic that we can keep going on and on. Then inconsistent disclosures to various regulators. GST, there is one disclosure, income tax, another disclosure, then another authority, another disclosure, FCRA, one disclosure, right, to meet the respective requirements. I will give you one classic example, which has been picked up in multiple cases. Quantitative disclosure as part of IT return and company's annual report. In several cases, it was found different because two different teams were preparing it. There is slight different methodology, but certain elements are common. And when the authorities were comparing, they found it different. Bang, they come on ground. They start investigation through that area. But believe me, once they start with that, they start looking, you need to submit other data. They will not find any issue with the main area, but they will find issue in other areas. How revenue recognition was done, how cutoffs were done, etc., etc., etc. So that's again a trigger. Interacting through WhatsApp, etc., saying that, oh, WhatsApp is safe, fully encrypted. WhatsApp has defined that it's fully encrypted, nobody can see it. Believe me, nothing is fully encrypted, everything is available. There are methods, including several cases, people delete on the front and think that it's not available. There are methods through which backups can be retrieved and then you can still get into trouble. So don't think that because I'm interacting over WhatsApp, I am out of trouble. There are a lot of cases now. Based on the WhatsApp, the entire case is established. Inaccurate responses to regulators, I think we discussed. So these are, I think, how do you address this? Besides doing enhanced fraud risk assessment, surprise reviews. You need to bring in element of surprise reviews as part of internal audit. So don't always do a review wherein you announce 2 weeks in advance because your auditees are fully familiar with your procedures, including how you select sample and what you exactly do. So they will be fully prepared. So slightly change the approach. Third party due diligence, emphasize on that. Whistleblowing, sort of again encourage whistleblowing within the organization so you'll know what is happening. More training and awareness. The cultural part, like I think Mr. Suresh emphasized, the cultural part or the gene part or the DNA part is very important. So the more you create a culture of compliance, the culture of controls, the more you would be able to prevent these frauds. So I think this is a classic example, but I think in the interest of time, I will stop over here. I mean, this is a topic that I am extremely passionate about, so I can keep going on for several hours. So I think thanks again. We'll still be available for Q&A after Aditya covers these topics from a legal point of view. And like I think Mr. Vidyadharan said, the book that they have released today, I think that covers the aspects of how to prevent frauds. And like Krishna Chaitanya said that howsoever you prevent, some frauds will still happen. So there is a book co-authored by me, which is over there, which is after the fraud has happened, how do you investigate, how do you report? And Aditya is also a contributor to that. So I would appreciate you to have a look at that. And also where you need to do investigations, that